Welcome to ETM's First Take of the Market podcast. As per usual, I'm joined by Director George Glynos. George, not a lot going on this week. We have a little bit of he said, they said going on between Trump and China at the moment. We know that Ukraine and Russia is meeting up in Istanbul this week to see if they can somehow hash out a peace agreement. We know Fed Chair Powell is set to speak later today as well, and it comes after his first meeting with Donald Trump. Well, not his first meeting, but his first meeting for this administration. I mean, I would have loved to have been a fly on the wall for that discussion. But other than that, really, it's just this string of local data that will be the focus point this week, including our GDP figures.
Yeah, so lots of noise internationally, but we, excuse me, starting to get used to that by now. With Trump, it's always a lucky package. You don't know what you're going to get from one week to the next. China's frustrated with the US. The US is still doing its thing. The war in Ukraine, I mean, who knows what to make of it? I mean, the same could be said with what's going on in Israel and Gaza. I never know. It's difficult to keep track of, and I think the world's become a little bit desensitized to that sort of stuff. So you're quite right. I think focus is now starting to turn back to some of the domestic issues, and we've got quite a busy week of data, and I think the collection of that data is going to give us a bit of a sense of where we're at as an economy. None of the readings going to be particularly pretty, I don't think. The GDP stats are going to be pretty anemic. We'll be happy to have them positive on a quarter-on-quarter basis. So let's just hope that comes through. But when this country is just run poorly. The economy is just run poorly. Our institutions have been debased. The policies are not working. If it's one thing that came out of that whole Trump debacle, it was highlighting things like BEE, which is long overdue. So we need to tackle all of these things. But in the interim, we've still got structurally weak growth. That'll get reflected in the GDP numbers. You'll see it in all the current account figures. You'll see it in the quarterly data that's going to be released later this week, and we'll see what the fixed investment figures are looking like. I'm not expecting any fireworks or any brilliant result to come out of that. In the background, you've had two pots that has debased the savings base of the domestic economy, and from what we can tell, much of that was just utilized for consumption rather than any investment or repayment of debt. So we've got issues in this country, and we've got, it manifests in an unemployment rate, which is what it is, which is unfortunate. And we're not going to tackle these things until we resurrect our institutional credibility, until we sort out our policies that aren't particularly conducive to investment or economic growth more broadly. And until such time as we sort out our geopolitical stance on many issues that perhaps has foreign investors a little bit concerned about the general direction South Africa is taking. So there's lots to fix. I'm not expecting the data this week to be particularly great, in which case, this might be the week in which we see the rand bottoming out in the short term and nudging back over the 18 level on a more sustained basis. It wouldn't surprise me to see that at all. And again, it will, I guess, raise questions around the future of things like inflation. We had the Reserve Bank cutting rates last week, so but highlighting the fact that they might be targeting a lower target, which I think is also an interesting development, and at least a welcome one. That's at least one welcome one.
I know you were in the post-MPC meeting last week. Were there any mention of that? Because we know that the Deputy Finance Minister a couple of weeks ago said that shift in the inflation target can be expected quite soon. Were there talks of that in the post-MPC meeting?
Yeah, there was quite a lot of mention of that, actually. So most of the questions that were posed during that post-MPC briefing to journalists and analysts revolved around the issue of the 3% and how the South African Reserve Bank would handle it. On one level, people were concerned that because it was a lower target, that the Reserve Bank would have to maintain higher interest rates and a more conservative stance for longer. But as you saw, they cut interest rates last week, and so the logic that they put forward was that even though they are going to be targeting lower inflation, that there was still room to cut interest rates, and that's because the real rate of which where repo is and where the inflation rate is still quite high, which means that to some degree monetary policy could be construed as slightly restrictive. So they had room to cut interest rates 0.25%, and looking at the FRA curve now, there's still the chance of at least one more rate cut this year, possibly two, depending on how the rand performs and what the inflation outlook looks like, and just how weak global growth is, whether we go into another global downturn, all of these sorts of things. But I think the one big message that came through is that 3% as an inflation target still sits within the current 3 to 6% target band. So it's not like you completely smashing the ballpark and doing something wildly different. Equally, you've got inflation at the moment, which is sitting sub 3. And so for the most part, you've got a monetary policy and an inflation target of 3% that's more or less in balance. And if you commit to going down that route, you also tend to lower your longer term inflation and interest rate expectations. So the whole idea here is to have lower inflation, which obviously supports the poor and protecting their purchasing power, and structurally lowering interest rates in a bid to try and invigorate or free up a little bit of borrowing capacity such that it might get utilized for investment purposes and just try and boost GDP growth a little bit that way. So that's the logic. From a fiscal perspective, there's another benefit, and that is that lower bond yields, which would tend to arise out of a structurally lower interest rate environment, will also just help the national treasury with the interest on debt portion. So the debt servicing costs will tend to subside. And we saw a very strong reaction from the bond markets last week, which kind of moves the needle in the right direction and ultimately is of benefit to the fiscal authorities as well. So all around, I think that's the general direction that they're going in and what we need to prepare for. And I would welcome it. I think it's a step in the right direction. If there's one caveat to all of this, I would just say that the fiscal authorities now need to come to the party as well. So it's not just good enough to just rely on monetary policy. I think fiscal policy needs to get its act together. The National Treasury and the Ministry of Finance needs to tighten up. We have got so much wasted expenditure still taking place in a very bloated government, and we need to rid ourselves of that and start to find a sustainable base of which we can then conduct prudent fiscal policy and the like. If we do the combination of that, I think South Africa suddenly starts to look like a more realistic and stable place to invest in.
No, a policy pivot is exactly what is required if we are to address any of our issues, whether that be poverty, whether that be unemployment, whether that be, direct investment that we know that we really, infrastructure investment that we really need to get the economy growing. And it always baffles me that we say these things, we're going to clamp down on corruption and they need these policy shifts. And then somehow it just continues almost unabated. I mean, the news headlines, I think it was Daily Maverick, but I'm talking under correction here, said that PRASA is being exploited where the contractors are, they've put up prices with a 2,000% margin or something ridiculous like that. And I'm like, these stories just keep on coming and coming and coming. And the rot is so entrenched and so deep that it's going to take a massive pivot to really pull it together so we can move forward. And I don't think it's going to be an easy step for anyone to take. I don't think it's necessarily an easy process, but it's definitely a necessary one that the GNU is going to have to figure out if we're going to address any of these issues and if we get to move forward. So, but barring any surprises this week, perhaps a Trump-China escalation, like you said, who knows? We've become a bit desensitized, but anything can still pop out. It should be relatively smooth sailing this week. So fingers crossed for that, George. Then we will catch up again next week.